If you own a condo in Toronto right now, you've probably noticed the silence. Your listing has been sitting for 60 days. The for lease sign isn't getting any calls. And even with interest rates down from the peak of summer 2024, that mortgage payment is eating a bigger hole in your bank account. We are in the Toronto condo nightmare, a market where sales have hit a 35-year low. Resale prices are down approximately 30% from the peak. And for the first time in decades, 0 new condo projects were launched this past quarter. I'll explain the latest data and the 38% gap that is trapping sellers in a corner. By the end of this video, you will know exactly why this is happening and the 3 specific strategies you can use to escape this trap before the floor drops any further. The first factor that I want to look at is the inventory avalanche. The new condo sales in the Greater Toronto Area hit a 35-year low in the first quarter of 2026. It's not just a dip. It's the slowest market since the early 1990s. There were 0 launches of new developments in the first quarter of this year. Developers are terrified of launching new products. The demand is just not there. Even with the Bank of Canada benchmark rate at 2.25, buyers are waiting. They see record high inventory and they know they can negotiate. They just don't know if we've hit the bottom of the market yet. The recent economic news are not helping buyers' psychology. In January of 2026, the Canadian economy lost 84,000 jobs. In February of 2026, all the jobs created, all 15,000, were part-time. This doesn't help consumers to feel confident about making a big move, such as buying a home or a condo. The second factor is the upcoming trade negotiations in July between Canada, US, and Mexico. No one really knows how that's going to play out and where things are going to end up. And last but not least are the geopolitical events that are happening right now, which are directly impacting the price of oil, which filter right through the economy in terms of inflation. It just makes everything cost more. In March of 2026, the data shows that the sales to new listings ratio for condos is at 32.9%. Anything below 40% is deep buyer's territory. What does this exactly mean? In this case, for every 100 new condos that come onto the market, only 33 sell, leaving 67 to sit longer on the market, which will probably result in a price reduction. So there's a glut of supply of condos, and at the same time, buyers are paralyzed because of the factors that I just listed earlier. The second factor I want to look at is the rental market. Condo rents in Toronto have actually dropped by nearly 7% year over year as of March of 2026. And the reason is there is more purpose-built competition. Thousands of units are being canceled as condos and converted to purpose-built rentals. These buildings offer professional management that individual investors cannot, and at the same time, it increases the number, or I should say the supply of rental units available on the market. So the higher the supply of rental units, and demand arguably has dropped because of less people wanting to live in smaller condos. And at the same time, we have lower immigration numbers, specifically downtown for international students who would take advantage of the condos to live close to the universities. Those two factors of higher supply of purpose-built rentals and lower demand has pushed rental prices lower, which is further draining real estate investors. The average condo rent is hovering around $2,474. But once you add maintenance fees, property taxes, and the mortgage, the condo owners are actually losing anywhere from $500 to $1,000 a month. On a short-term basis, some investors can handle that. And from a psychological perspective, some investors will say, you know what, I'm okay losing that much a month. I can financially manage it if there is appreciation in the value of the investment. However, this is not the case. We haven't seen condos appreciate since the peak of 2022. As a matter of fact, prices have dropped by approximately 30% since then. The third factor is the price gap between new and resale condos. This is a bit of a nightmare. Right now, there's a 38% gap between what developers are asking for new units, which is around $1,189 per square foot, and what resale units are actually selling for on the MLS at around $859 per square foot. This price difference is driving buyers who want to buy a condo into the resale and freezing the sales of new development, which is reflected in the zero launch of new projects in first quarter of 2026. Now, things might change because recently the federal as well as the provincial government announced the 13% HST rebate on new home sales if a contract is signed between April 1st of 2026 and March 31st of 2027 for all buyers, not just first-time buyers. Could be for a second home buyer, could be for a real estate investor, anyone buying a new home, condo or a house, a new development in that specific period is eligible to get the full 13% back up to a specific price point. So we'll have to see how that's going to play out with respect to helping developers move unsold inventory of new homes. With respect to the appraisal, this is another issue for buyers who bought pre-construction condos in 2020, in 2021, and to a certain extent in the earlier parts of 2022. Because the price were so inflated, the bank might not appraise the unit for what the buyer signed the contract at the peak. They will appraise it at current market conditions and price valuations at the time of closing. This will cause an issue because if the buyer bought it at $1,500 a square foot, and now the bank is appraising at $1,200 per square foot, the buyer has to come up with the difference in price to close on the units. Now, some buyers will have issues coming up with the difference of funds. There's a lack of capital or access to capital to close on the deal, which will put some of them in a difficult position of either walking away from the contract, which will result in legal action by the developer, or they will be forced to put the condo up for sale via the assignments market at a loss. And again, they will have to come up with a shortfall because they can't sell it for what they bought it for. With respect to the prices, now prices on the resale end are not just done by a bit. And if you look at this chart here, you will see that the prices are roughly down 30% from the peak of February 2022. And in the chart, I broke up two areas of Toronto, C1 and C8. C1 is the area between Yonge and Dufferin from Bloor to the lake. And then C8 is the east side, so which is Yonge to DVP from Bloor down to the lake. You will see that both, although C1 is a little bit more expensive, both areas of downtown have dropped by approximately 30% since the peak of 2022. Now, this is an issue because it will drive the appraisal values lower when lenders use it for appraising newly completed projects. On the other side, for current condo owners, this is an issue because a lower value will keep them stuck. Because if a condo owner bought at the peak or close to the peak, and now they're wanting to start a family or they got into a relationship and they want to move into a house, they might be in a negative equity position and they will be stuck in that condo because they can't sell have enough capital to make a move to the next natural progression in home ownership, such as moving into a semi-detached or detached property. The fourth factor is the mortgage renewal. In 2021, 2020, and very early parts of 2022, homeowners took out mortgages in the 1.5 to the 2% range on the fixed side and renewing now. Although the benchmark rate is at 2.25, fixed rates are in the 4.5 range. Pretty much those mortgage rates have, or I should say, will double from what the homeowners took out 5 years ago, which will directly impact their cash flow from an investor side. That'll increase their negative cash flow. And for homeowners, it will increase their monthly costs, preventing homeowners from, saving money for the next purchase or having extra capital to pay down the mortgage to build more equity. And this is why we see that stuck sector of the condo markets, which goes back to the negative equity. Because had they bought 4 or 5 or 6 years ago with 5%, 10%, even 20% down, after 5 years of ownership or 6 years of ownership, they might be in a negative equity position or pretty much break even once you take into account the cost of purchase, so land transfer taxes and legal fees. And now when they sell, there's realtor fees, legal fees, mortgage penalty costs that have to be taken into account. So once you take all those numbers into account, some of those condo owners will be stuck in their current situation because there isn't enough equity to make a move into the next home they want to upgrade into. The data doesn't lie. With a 38% gap between new and resale prices and rents continuing to soften, the wait and see approach is costing Toronto condo owners thousands of dollars every single month. The market is recalibrating. We had years of unsustainable appreciation, completely detached from incomes. But that's the cold comfort if you own a condo and losing money on a monthly basis. If you're feeling trapped by your unit or you're worried about what to do next, you need a specific exit plan. Book a call via the link in the description below. And if you're thinking about buying a condo, watch this video right here to see which condos you should never buy in Toronto. Thanks for watching, and I'll see you in the next one.